Guys, it's Simon, and I haven't made a video in a while, so I figured I'd do one real quick. I'm in Medellin, Colombia right now visiting my girlfriend, and she's a little hungover and running errands, so I figured I'd take a little time and make a quick video on puts. I was talking to somebody in one of the groups I belong to last week, and they were telling me that puts don't react the same way that calls do as far as percentage return on investments and things like that. So I thought I'd do a quick one and do a little bit of a comparison. I've already made the call video, and it's in my. I'll link that to that in the description. But here we have Thinkorswim, and we're on demand. It's Sunday today, so we're actually rewound this down to last month, which is a Wednesday. I think June 18th was a Wednesday. Tuesday at right before 9 o'clock. And the reason why is because I know that it kind of peaked right before that, and it's on its way down, and it consistently goes down pretty much the rest of the morning. So I'll be fast forwarding this on occasion, but I wanted to give you an example, which actually shows what the price of what the profits or losses are for a put as the price is going down. So what we're going to do is we're going to go ahead and so this is on pause right now. We're going to go to the trade tab, and we're going to buy three puts. We're going to do one that's in the money, one out of the money, and one at the money. So the first one we'll do is the 39 delta, and we'll the ask is 12.55. So this is going to end up costing us $1,255. We're buying a put with a strike price of 225. I'll go ahead and confirm and send that. And that took right away, even though it's paused. And then the next one we'll do is the 235 strike price, and this is at a negative 48 delta, and that will be a buy, and that'll cost us $1,710, not including obviously whatever else. And then we'll do one that's right at 245 strike price. That's actually incorrect. That's a sell. We want to click on the ask, and that's a buy of one put for the 245, and we'll confirm and send that too. All right, so as of right now, close that. We'll go to the monitor tab. We have all of our puts now. So we have 0, 0, and 50 cents, negative 50 cents. And so we're going to start this, and we're going to switch back and forth between the chart tab and the monitor tab. So I'm going to push play. It'll take a second to buffer, and here we go. It's starting to work. So as of right now, we have a profit of $40 on the 225 put, 0 on the 235, and now here we go, 40, 45, and 62. So we're actually going to go back to the charts tab. We'll take a look. So at 232.92 right now, and we're going to fast forward this 10 minutes. We'll go back to the monitor, take a look. Okay, we're at 40, 45, and 62. So we're going to fast forward this 10 minutes. Okay. And it's pre-buffering, as you can see right here. There it goes. And then we'll go back to the monitor tab, and we're at 50, 85, and 119 now. Last time I did 3 separate videos and spliced them together on the 3 different calls. Someone mentioned that should have just did all 3 contracts at the same time, which makes a lot more sense. So that's what I'm doing now. So we're going to go back to the chart. We'll fast forward another 10 minutes. This goes to about, I think it bottoms out for the day at around 12 o'clock. So we'll just fast forward every few minutes or every few seconds and kind of keep an eye on what's going on with it. It's pre-buffering again. The internet in Colombia is not the best, especially when you're staying at Airbnbs. They tend to get the cheapest one. The internet can be a lot better. They have a business line. I had the last time I was here, and that was a lot faster than what we have here. If you're playing anything on Netflix, you're pretty much bogging down the internet on the very cheapest one. But that's what you get when you get Airbnb, when you stay at an Airbnb. All right, we're going back to the charts, and we'll fast forward another 10 minutes. And it will pop up and down. I mean, it doesn't go straight down, so it will go up and down. But overall, it's on a downtrend for that morning. All right, back to profit loss page, and we're at 50, 30, and 64.50. And we'll actually do, I'll do the same thing that I did with the call. I'll put together a comparison on what the return on investment is on all three of these, so that way you kind of have an idea of what is better to buy, as whether you want to buy in the money, out of the money, or at the money. All right, fast forward 10 more minutes. Actually, let's go ahead and fast forward it all the way to close to noon, because just watching it go up and down for a little bit. Actually, let's go ahead and just type this in. Let's go to 12 o'clock. 0 seconds. All right, so now we're on the same day. It's right before noon, and this is pretty much the lowest point. It dropped almost 10 points. So, and I think it actually does do a full 10 points at some point, but I think this will be enough for comparison. But once it finished buffering, which it just did, we'll go back to the monitor tab, and this is what our profit loss is sitting at the moment. So we have 3 Tesla puts. One's the 225 put is at 235 profit. The 235 put is at a 307 profit, and the 245 put is at a 402 profit. So we're going to pause this, and then I'm going to put together a little comparison, and we'll see which ones did the best. Okay, so going over our 3 puts. Our first one was a 225 put, so it's just out of the money with a negative, I think it was around a negative 40 delta. It cost us $1,245 to as a premium cost, and our return on that $1,245 was $235. So our return on investment was an 18.88% return. Our next one was at the money, and that was a 235 put, and that one cost us $1,700, and with a profit of $307.50. And that gave us a return on investment of 18.09%. So not much less than the out of the money put. And then our final one was an in the money, and it was a 245 put, and that one cost us $2,238, and the profit on that was $402, with a return on investment of 17.96%. So really not much of a difference for all 3 of these. So basically, you just have to decide what your costs, how much you can afford, because obviously there's quite a bit of difference between a 225 put and a 245 put, and it's about $1,000, and then the return on investment is not much more. So I mean, at the very end of the day, I think the out of the money put is the way to go, because your cost is lower and your return on investment is higher. So that's just a quick video for today. I will be getting back into the swing of things next week. I will be back in Houston, and then should be moving to a new state for about a year for a project in oil and gas. So I will be on a routine, so I'll be able to put these out more consistently. I've been all over the place lately with all the stuff going on, so things will get better and a little bit more consistent. So I hope that helps you with your put buying decision making, and I will see y'all guys on the next video. Thanks.